of saved for the week. A bit of a shakeout, middle of the week there. The large growth stocks have come through. And I guess bigger picture, we're looking at maybe the final Fed rate hike next week. Economic data holding together okay. The recession's not arriving on time. What's not to like?
So there are a number of things not to like, Mike. It's true. This has been a great week, and consensus has reacted accordingly. And so when we looked at the back half of this year, it used to be that consensus was expecting a 1.6% and 8.5% growth in the third and fourth quarter, and that has actually risen. Consensus is now looking for 1.7 and 8.8, which is the wrong direction to go in. Consensus has been woefully behind with just about every quarter, except maybe this second quarter that we're in now, where consensus is looking for negative 5%. But even this first quarter, Mike, consensus was flat when the quarter started and was at negative 6.7% by the time the quarter ended, which looks to be directionally correct this last week, notwithstanding. So what's not to like? Well, this reminds me of August 2022, Mike, where we had this sentiment, a very similar sentiment and emotion-driven rally that then collapsed on the back of the Fed coming out vociferously to articulate their commitment to beating inflation. And after that Jackson Hole, we then reached the October lows. I think a similar situation will play out here, not only with the debt ceiling, but when you look at consensus in 2024, it's at a whopping $245 of earnings. How we get from this year's 206 to 245 next year is beyond me. How we get to 10% in the back quarter of this year is beyond me. And so I think consensus is off this week, notwithstanding. I think that we'll see a bifurcation, not only in tech, but in financials. The large money centers are in a different situation than the regionals, which have more pain to come through CRE. And in tech, we're seeing the NASDAQ 1000 dramatically outperform NASDAQ overall, as well as the Russell 2000 growth index.
Well, last August, if we want to kind of follow that pattern, the Fed was, by its own admission, still way behind the curve. The market pricing had really built in that they were going to be soon pausing. Powell didn't want to see that. Now, you haven't had a ton of pushback in terms of how the market is pricing the Fed path. The bigger risk seems to be maybe the economy starts to wobble in a more pronounced way between now and maybe when the Fed finally declares that it's finished.
I'm going to challenge that, Mike. I don't think there's a difference because right now Fed funds futures and many of our colleagues still articulate rate cuts in the back half of this year. And the Fed has been pretty staunch in saying that they don't see a scenario in which they do that, absent a black swan event. So I see the same kind of disparate views of what the Fed is saying and what the market is doing. And so, yes, while the rate hiking cycle may be over, we're certainly nowhere near any rate cuts at this point.
That's fair. And in fact, I guess it all comes down to the debate on whether, in fact, you think the stock market truly has been internalizing that outlook for potential rate cuts. I do want to get you quick before we go, though. What do you do in terms of tactically right now in the market? Defensive groups have outperformed. Seems like the market's bracing for a slower economy, yet you probably have to pay up in terms of valuation for those types of stocks.
Right, and the increasing valuation is really a back burner concern of mine. What the assets are doing is they're seeking safe haven. They're seeking safe haven in money centers. They're seeking safe haven in that mega cap tech NASDAQ 100 that has secular tailwinds. But the issue that's going to arrive before the recession issue arrives, Mike, is the debt ceiling, where, I've said many times that our best case scenario is the 2011 example that we have set, where the market declined 20% in the 3 weeks before the X date. You see, even in the yield curve, that concern over this is starting to grow, where there's a market difference between the 1 month and the 3 month, but hang out at the short end of the curve where it's safe. That's what I think.
That's fair. As the deadline approaches, probably becomes harder for the market to shrug it off. Greg, great to talk to you. Thanks so much.